Apple CEO Tim Cook gave investors more detailed insights into the impacts of tariffs on its business. Now, there's so many moving parts, but I think it's informative for investors to digest this news that Apple's CEO Tim Cook provided to investors and incorporate that with the latest developments this morning with President Donald Trump pausing tariffs on China for 90 days. Still, Apple is not out of the waters just yet, but it delivered great news for investors with this 90-day pause that the relationship between the US and China is thawing a little bit. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So what I'm looking at here is Apple's latest quarterly earnings conference call transcript when Apple held a meeting with Wall Street analysts. Now you can get access to all of these with a subscription to finchat.io. I have a link in the description for a discount. For the March quarter, they had a limited impact from tariffs as they were able to optimize their supply chain and inventory. For the June quarter, they're unable to precisely estimate the impact of tariffs. But assuming that the current global tariff rates, policies, and applications do not change for the balance of the quarter and no new tariffs are added, the CEO said that they estimate the impact to be an additional $900 million to their cost. The CEO warned, however, that these estimates should not be used to make projections for future quarters, as there are certain unique factors that benefit the June quarter. So what this last sentence means is this $900 million impact for the June quarter is going to get much larger in future quarters because there's several estimates, several impacts that will benefit the company in the June quarter. So 900 million is the start and it will get worse. Now, the pause that was implemented for the 90 days, I'm not sure if that's going to impact the tariff cost for Apple because they were excluded, the electronics that Apple sells were excluded from the 145% tariffs, but they still had to pay the roughly 20% tariff that were initially placed before the increases went into effect. And so that tariff rate, as a result of this pause, will still remain in place. In fact, it'll still be higher. Actually, it'll go up to 30%. So these numbers that Apple talked about, these were when there were roughly 20% tariffs in place on its products, and there are likely to be a little bit higher tariffs on its products. So 900 million just a starting point. So let's get an idea of its overall business so we can put it into context what 900 million really means for the business. Products revenue in the most recent quarter were $68.7 billion, which were up by 3%, driven by iPhone, iPad, and Mac. The wearables business actually declined. So this is the part of the business that's impacted from tariffs, right? The services business, which was 26 billion and increased 12%. That part of the business is not directly impacted by the tariffs, right? The cost of goods sold are not going to hit the services business, but the services business will be impacted because sales of products are likely to decrease, and decreasing sales of products leads to decreasing services purchased on the platform. The good news for Apple stock investors is that the company's gross margin overall was 47%. And that's a very large profit margin. That gives the company a lot of wiggle room to absorb these tariffs, to absorb these higher costs. Products specifically generated a gross profit margin of 36%. 36% product margin. So they have a very high product margin, relatively speaking, with other hardware sellers. They have room to absorb some of these tariffs. At a tariff rate of 20 or 30%, that's manageable for Apple. Very manageable for Apple, especially because it has very strong negotiating power against its suppliers, and it can go to the suppliers and say, look, we didn't ask for this situation, but these tariffs make it so that we have to ask you to sell your manufacturing services to us at a lower cost. We need you to absorb 10% of the cost of tariffs, and the suppliers are likely to offer Apple that kind of mitigation to those tariffs. Because if they don't, then Apple will more aggressively move its manufacturing outside of China. It has some manufacturing presence and optionality in the United States. It has even more manufacturing optionality in India. So it has negotiating power against the suppliers. It can ask them to absorb 10%, roughly, I would estimate, is a reasonable number that it can ask its suppliers to absorb. Then Apple can mitigate some of the manufacturing a little bit outside of China, use India's manufacturing to source the sales in the United States to offset, let's say, another 10%. And so the end result might be an increase in the cost of goods sold for Apple that might decrease its product gross margin closer to 30%, which is still really strong. It's still really strong. It might not be as strong as 35, 36%, but it won't go down, it won't collapse if those tariffs are around these levels. And thankfully, it does have the services segment, which generates a profit margin of 76%. Many companies that operate on this business model, where they sell hardware products and then they sell services as an attachment to the hardware products, those companies would be happy. They would be thrilled to sell their products at break-even prices and then just generate the profits from the services segment. Apple is fortunate enough to have built a business with such strong customer demand that it generates a robust margin on the product side of the business. And then it also generates a very strong margin on the services side of the business. So Apple's business is so profitable that it can certainly absorb the impacts of tariffs one way or another, mitigating some and offsetting others, and still be a very profitable business. But for investors, the valuation is already so expensive that the decrease in tariffs are likely to make the business less attractive longer term because it was already trading at an expensive valuation that incorporated Apple's excellent prospects, right? It's been a great business for decades, and the stock price reflects that great business prospect for the longer term. So I hope this provided more insights into how Apple is adjusting to this new world with increasing tariffs. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.